What I'm about to share is a clip of Jim Cramer, the famed high-energy commentator on CNBC. This is something he actually said on camera.
Right, but what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction.
A lot of people frame this as some kind of dramatic secret leak. The truth is that Cramer gave this interview on a webcast back in 2006. Then one member put it on YouTube and it spread like wildfire. That doesn't make what he said in the interview any less real or any less damning. Cramer spoke real candidly about all the dirty tricks that the smart money and hedge funds play for their benefit. Today I'm going to walk you through 5 specific takeaways from this interview that could permanently change how you think about the stock market. Be sure to stay till the end because I'll share how you can take action on this newfound knowledge. And it's not the same boilerplate advice you'll get from ChatGPT. By the way, my name is Steve Reitmeister. For over a decade, I was editor-in-chief of Zacks.com, where I covered these markets on a daily basis. I'm now a partner at WallStreetZen.com, where we've spent years building tools to help regular investors cut through all the noise. If this sounds like something you need to hear, hit that like button right now. It tells me you want more content like this in the future. Takeaway number 1, the futures game, or how only $5 million moves the entire market. The interview begins with the host, Aaron Task, asking Cramer why the futures are pointing up, but stocks are actually going down. And instead of giving some macroeconomic answer...
A lot of times when I was short at my hedge fund, and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game. And it's a lucrative game.
If Cramer needed the market to be down, he would manufacture activity in the futures market before the open to create the downward pressure. If he needed it up, he'd commit the capital to push a handful of stocks higher and create what he calls a rosy feel. Then once retail traders see those green futures and pile in, he shorts the whole move with $10 million. Now, a lot of investors look at pre-market futures as a signal, a sort of reliable read on where the day is heading. And Cramer is telling you point blank that signal can be manufactured, and it does quite often. He's describing using FOMO against you in real time. He admits to doing it, and the sad fact is the strategy is 100% legal. There it is, the code of silence. He knows nobody's supposed to say this stuff publicly, and then he says it anyways.
But by the way, no one else in the world would ever admit that, but I could care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Because he's not on TV, he's in a room with subscribers who pay to be there. The question we're sitting with is, what else doesn't get said on TV? All right, takeaway number 2, engineering fear and greed. We all know these emotions are what sway stocks, but hard to imagine how easy it is for just one player to make it happen. Again, Cramer lays out the playbook in this clip.
You can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday and you say, listen, I'm going to boost the futures. And then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal.
Right.
And it is a very quick way to make money and very satisfying.
He pumps it up. Retail traders see green. They feel the FOMO and pile in. Then Cramer fades it. And once it starts moving down, he doesn't even need to sell all the way to the floor. Retail panic does the rest for him. Greed is slow, fear is fast. This is the same fear and greed asymmetry in its purest form, and this is how it gets played.
Fundamentals.
Oh, okay, well, but in terms of the fundamentals, you've been writing about how you think...
Who cares about the fundamentals? Research and motion just blew out the court.
Right.
But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
Is he right? Unfortunately, the answer is yes in the short run. Prices have no obligation to reflect what the business is actually worth. They reflect who's pushing capital in which direction. But in the long run, the chickens always come home to roost. The manipulation doesn't last. The true value of a business always reasserts itself sooner or later. Patient investors like Warren Buffett have proven that time and time again. By the way, if you're finding this useful, please hit subscribe and ring the notification bell. We publish videos every week, and this is the best way to stay notified. All right, Let's get back to the video and see what else Kramer had to say. Takeaway number 3, targeting fulcrum stocks. And here's where things get real.
You've really got to control the market. You can't let it lift.
Just take a second to appreciate how casually he says it. You have to control the market. You can't let it lift. And the worst part is that isn't wishful thinking. You want to see or rather hear how it works in practice?
Foment, that's a violation of
Ferment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal.
So straight off the bat, that's illegal. Mind you, those are his words, not ours, and he's confident enough just to flat out state that he can get away with it. At the end of the day, you might buy a perfectly good stock only for the hedge funds to knock it down. Jim was kind enough to provide an example with Research in Motion, the company that would go on to become BlackBerry.
Can't let it lift. When you get a Research in Motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. Hit and offer, hit and offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on Research in Motion.
They don't go for just random stocks. If you knock down the ones everyone is looking at, they help drag everything else down with them. That's exactly what he means by fulcrum stocks. So, in a very real sense, a company being successful can be a magnet for this kind of behavior. And just to bring the point home, for a bit of context, if you want to know what Research in Motion was back in 2006, that's kind of what NVIDIA is to the stock market today. Now, keep in mind the next time one of those stocks moves violently with no obvious catalyst. Now, back to Kramer.
But a hedge fund that's not up a lot really has to do a lot now to save itself. So
we've already established that hedge funds can and do skirt the law without so much as a slap on the wrist. With that in mind, if they're in trouble, it's obvious that they're going to pull out all the stops just to keep their heads above water. Stick around because how the financial media plays into everything is what we'll delve into next. And by the way, if you want to build a portfolio built on solid fundamentals that will prove out in time, then claim your copy of our special report, 3 Stocks Doubled This Year. I'll drop the link in the description below or scan the QR code on your screen. Takeaway number 4, weaponizing the financial media. Let's see what Mr. Kramer has to say about the financial media.
What Wall Street Confidential is not giving you the party line.
I'm not saying that everyone in the financial media has an agenda. But Jim just told you straight up, there's a distinct line between what he says on television and what he's willing to say when he believes he's in a private room. Now, keep that in mind as we go along. Now, let's listen to a real example of everything that Kramer has been talking about up to this point.
Yeah, Apple's very important to spread the rumor that that both Verizon and AT&T have decided they don't like the phone.
Right.
That's a very easy one to do because it's also you want to spread the rumor that it's not going to be ready for Macworld. And this is very easy because the people who write about Apple want that story. And you can claim that it's credible because you spoke to someone at Apple because Apple doesn't.
Right, they're not going to comment.
So it's very obvious what's going on. He's drumming up negative sentiment, but I'd be more accurate to say he's conjuring it out of thin air. There's an information vacuum, and Kramer is making full use of it for his own ends. That's not all. You'll be shocked at how much goes on, the specifics of this entire ordeal in this next segment.
And the way you would do that is you pick up the phone, you call 6 trading desks, and you say, listen, I just got off the phone with my contact at Verizon. And he has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let them in. We're not going to let them do what they did to music. And, I think that's a very effective way to keep a stock down.
Right.
You start with a complete fabrication. Make it sound authoritative, spread it around, and repeat it enough, and voila, it takes on a life of its own. Here's another example from Kramer.
January 80 puts that makes it look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts. Then you go position limit with, you use a firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts. And you just kind of create an image that there's going to be news next week. And that's going to frighten everybody.
Right.
Then they all go out and say large put buyer, UBS. And then they call Pisani again. You have to use those guys and say, listen, I see a big buyer of puts and I'm told that it's SAC.
When it all comes together, you've created the illusion of informed bearishness. The orders are stacked up, so it shows up on the tape, and finally you get in touch with the media and tell them it was someone else. In this case, he was talking about SAC Capital, which was a killer fund back in the day, so the fear goes into the 5th gear.
I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important.
And look, I want to be clear about this. I'm not saying every headline is planted or that every analyst is in cahoots with the hedge funds. That certainly isn't true. But the point you need to take away from this is that financial media, even the reputable ones, can be used as instruments of manipulation. Not all the times, but often enough. So the next time you feel urgent pressure to act on a headline you just saw on TV or online, slow down for a minute. Consider if that urgency might just be engineered, and if this move is truly in your best interest. Finally, we had the fifth and final takeaway: develop a fiction. Okay, this might be the most damning quote.
Right, but what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction.
How this is not illegal is beyond me, and how anyone could spin lies for a living and say it so bluntly, if not proudly, is truly shocking. Again, I'm confident it's not just Cramer up to this nonsense. He is just pulling the curtain back on industry-wide practices. And here he is with another real-life example.
Research in Motion was a real blowout quarter. It was a really good quarter, and I was quite surprised how strong the margins were. It looks like the other guys have really dropped out. It's a terrific story. Should it be up 6? Yeah, I think so. But, look where we are. It's Friday. You got 5 more days to make your quarter.
Right.
Can you really risk having RIM up this much? I don't think you can.
Listen to the way he's talking about RIM. He's practically gushing about the stock and how great it is. He knows it's supposed to be up 6% and would suppress it anyways because of a 5-day performance window that determines his bonus. Business, enterprise value, and stock prices are 2 completely different things, and the people with the most capital in the room can keep them apart for exactly as long as they need to. You can't out-trade a hedge fund, but you don't need to. Cramer just told you himself. 2 weeks later, buyers came to their senses and the truth surfaces in the share price. Your edge is knowing what your stocks are actually worth before that happens, and have the patience to see that conviction through. That's exactly why we built our proprietary quant model to Zen Ratings. We synthesize 115 different factors into an intuitive A to F grade to tell you the true fundamental health of your stocks. This way you can stand tall, holding on to your stocks when the hedge funds play their short-term games, built to scare and confuse you. This way you come out the other side on top. Now, I want to hear from you. Drop a comment below and let me know which one of these 5 Cramer takeaways hits the hardest. And if there's a stock you're holding right now that you're not so sure about, mention it. I read the comments and I might just cover it in future videos. Cramer's not the only high-profile name that uses questionable investing practices. That's why you should watch this next video covering 10 AI stocks that Nancy Pelosi owns now. Does she have insider knowledge or just a shrewd investor? Watch now and place your bets.